Glad to have everybody here. So welcome to Strategic Swing Trader Live, where Sammy Abusad is going to go over the market and he's going to show you exactly what stocks he's watching for this coming week. So please read the disclosure. Very important. This event is for educational and entertainment purposes only. So, and as you know, trading is risky. And stick around. So we're going to make a special offer to you at the end of the presentation. So let me tell you a little bit about Sammy. Sammy is this handsome fellow you see on the screen. Sammy is our Director of Education. He's been a professional trader since 2007. He runs our Strategic Swing Trader, Strategic Day Trader, Earnings Engine, and mentorship programs. And his expertise just runs the gamut: core, day, swing trading strategies, particularly gaps and climactic plays. And fun fact, Sammy is also a former certified public accountant. Now, we want to get right into the action today. I think you've heard more than enough from me, so I am going to pass control over to my friend Sammy. So Sammy, how are you doing this morning?
Doing great. Thank you so much for that warm introduction. Hi, everybody. How's it going? Here we go. So we're going to do what we always do, is go over the market, go over some swing ideas for next week, tell you what I'm watching. First, what I do is mainly when I look at the market, I look at the Qs, which is the tracking ETF for the NASDAQ 100, and then the SPY. That's pretty much it. And as you can see, they're both at all-time highs and pushing higher. Now, we know that California is shutting down again, and we have some bearish news over the weekend. But the truth is, the market has ignored the news, the bearish news, for the past 6+ months. So that shouldn't be any, I don't foresee that as an issue. If we gap down, then that would be a little bit bearish. So in terms of what I'm looking at on the daily chart of the Qs, 303.50, we shouldn't break under it. If we do, then I'd expect a pullback. Okay, as long as we stay above 303.50 on the Qs, I'm going to be bullish for next week. The SPY doesn't have an exact number that I can give you. It's just grinding up, but really the market is just all out bullish. IWM has been leading the way, all time up, broke out. It is often I see this all the time when we get a breakout and then the news comes out and then the market gaps under the breakout. That would be bearish if we gapped under this breakout bar on the IWM. But again, barring a gap down on Monday, I expect the market to continue higher. Okay. Now, gold is a different story. I like to review gold every now and then. We actually have a daily sell setup on gold. People are bullish on gold. I was for a long time. In fact, I did a video on June 1st of 2019. June 1st. It's on YouTube if you want to see it. Right here. That's June 1st. And I called gold long to 174. It went to 194. Okay. So gold has made the move already, got to the prior high, and now it's pulling back. I don't think it's the time to get back into gold. In fact, as I said, we have a run up to the decline 20 on the daily chart to go. That's a sell setup. It's not a sell setup I would take, but it's bearish. GDX is the same. That's the gold miners. Now, USO is pretty bullish. I like USO higher to 48 bucks. So if we look at the weekly chart of USO, as you can see it also better even on the monthly chart. We had a breakdown and the breakdown failed. Let me go to logarithmic charts. I'm on arithmetic scaling. Here's logarithmic. So we had a sell setup. This is what's known as a sell setup, when we have a sell-off and then a multi-bar rally and then a breakdown. That's a sell setup. The sell setup is failing. So USO looks higher to the 20 MA on the monthly. At the moment, it's around 52. But I think, if we can get to 48 on USO, that would be a nice, sweet little move, right? Wouldn't it? So I like USO higher. So equities like higher, oil like higher, gold, I don't like them lower. I don't like gold lower, but I wouldn't play gold higher. Okay. So that's just a typical review, the market review that I do every weekend. And now we're going to go over some swing ideas, some swing and core ideas. Core means long-term ideas for Monday. We'll start off, this list is sorted alphabetically. If you're a subscriber to my newsletter, I already completed the newsletter. You can access it by accessing your T3 Live account, or you can just wait for the newsletter to go out by 8 o'clock East Coast time on Monday. So giving you over an hour and a half to put your orders in the system before the market opens. Or you can just, like I said, you can go to your T3 Live account and access the newsletter right now. Let me show you this BKEP. Look at that monthly chart. Was in a downtrend and now is breaking out. In fact, if I go to the scaling is important when you're looking at long-term charts. Look at that. Isn't that a sweet breakout setting up? Of course, the BKEP is a thinly traded stock, so I'm not going to talk about it much, but I like it as a long-term play, not as a swing, as a long-term play. BKEP. DNK is more of a swing because it's just setting up on the daily chart. It's not setting up on the monthly or the weekly. This was in a severe downtrend, ended the downtrend, right? Pulling back right now. So it would need to take out 363 for it to trigger long. The stop could be as tight as 324. Okay, just 1 penny below the SPAR's low. And then the target, the prior pivot high, as is often the case when you're looking at a pullback. So that's the DNK. ETM is also a core. To tell you the truth, I was already in the ETM and I got shaken off this bar. So I raised my stop and then over here and I got taken out. So I'd like to get back in it. It looks higher long term, especially on the weekly. That's a weekly breakout. Looks beautiful. Okay, so this is more of a long term play. Entry would be just over this bar's high, which is 286. Stop under 237. Okay, and then just hang on for dear life. Next on the list is Huge, and Huge has got a little pullback here. It's called Huge, but it's a low price stock. I like it on the hourly chart even better. Look at that, the hourly chart. It looks beautiful. So I like it over 192. Okay, 1 second. So I like it over $1.92 long, and then stop would be under this pivot right here, which is $1.70. Okay, so I just put one penny above, so 193, and 1 penny below, 169. And target is the prior pivot high around 238. Okay, so that's the Huge as a pullback. It's similar to the DNK, I would say, but I like the Huge even more. IPOF, I guess, is the symbol. Now this is a new stock. I don't usually do these, the new stocks right out of the gate, and especially if they're bathing at the bottom, which this is. Usually when you're playing you're playing a base breakout, you want the base to form at the top, okay, not at the bottom. But if it takes out the base right here, and the top of the base is 1045, okay? So if it takes out the base around 1046 or 1050, even if you want to be safe, then it has plenty of room to go all the way back up to 13. Now, I wouldn't target 13 because that would be, expecting a little too much out of the stock, but I do like it over the base long. And then on the way up, I don't have a specific target. It's only a few days old, so we would have to just manage it. Okay, it's kind of like which I know you've seen the email that went out about this. It's like the CRSR. People were emailing me all the time, almost on a daily basis. What's the target for this? When I called it long at 29.50. Okay, and I said there is no target. It's at all-time highs. It's a new stock. It was only a month old. Okay, it was only a month old when I got in it. So it was also at all-time highs. I don't have any resistance levels to the left to use as target areas, to use as areas to get out of it. So what we're gonna need to do is manage it. The way I managed it is when it went climactic, right? I got out of it at the top. So this one is similar. It does have a reference point, which is the top of the tail at 1340, but I don't think I would expect it to get up to 1340. So maybe 11 for target 1 or 1150, and then target 2 up here somewhere around the 50% retracement. So this would have to be managed. Maybe it can be managed bar by bar on the hourly chart or on the daily chart. Okay, so it just depends on how it sets up. So I don't really have a target for this. IVR is a long-term play. This is a real estate stock. It's a mortgage REIT, to be exact. So they make mortgages to commercial properties. This is why it got hurt. Some of you might be thinking, wow, this, this is kind of the last thing I would want to play. And you might be thinking, right, that, commercial properties got killed, right? With the lockdown still in place in some parts of the country. And this is why it dropped a lot. We actually played it earlier in the year over here as a breakout, and it just doubled. It more than doubled in 2 days, in 3 days, exactly 3 days. Went from like $3, okay, to $8, almost $8, $8.40. So it's almost tripled, almost. Now, I like it again higher. People that miss the move might think, okay, well, this is my chance to get back in it and make it pay. Well, yes and no, because this was a different move, okay? And the stock went climactic. When a stock goes climactic means it goes vertical and then it crashes. This is why I wouldn't play. Somebody just emailed me on the weekend about the CRSR to get back in it on a pullback now because they missed the initial move, right? But the stock went climactic, okay? The bars were getting bigger and bigger, which means more and more people were getting in it per day, right? And it crashed. When they go climactic and they crash, you don't want to get back in them because they're not right away, at least, because they don't go, if somebody is walking down the street and trips up, they're going to get right back up. Should be able to get right back up, dust off, and keep walking. But if they fall from the second story, second level, or the 10th floor, they're not going to get back up and go right back to running. Does that make sense? They're not going to, if they fall from the 10th floor of a high-rise building, they're not going to be able to dust off and keep going. So that's the thing about this. I wouldn't get back in it right away. I'd want to wait for it to kind of heal, right? And the IVR, in my opinion, has done that. Okay, getting back in it here would have been a mistake. It went up a little bit and then failed, but it's been basing since July. Okay, around the beginning of July, and we're at the beginning of December now. So I think this is ready. This is ready. If it takes out the base over here, I like it higher, not so much as a swing trade, but more as a longer term trade. In terms of what are the targets for this, because I like to give you the entry, the stop, and the target. In terms of the targets for this, it's tough because do I expect it to get back up here? No, at least not in the foreseeable future, right? So where's the target? Are there any clear, clean reference points that I can use? Not really. Maybe 550 for target one, right? Maybe it gets to $8 over time, but it would need probably months, which would make it not a swing trade, but more as a long-term trade. The entry for this is just over the base, so over 359, and the stop would have to go to the daily chart. The stop would be under this pivot, 329. Okay, so it's a 30-cent stop, exactly, 30 cents. Now, if it gets back to up here, it'll be multiple R's. R's means risk units. If it gets up to 8, it'll be huge. So this is more of a longer term play, the IVR, okay? LLNW is a daily buy setup, plain and simple. When you have a run up and then a 3 or more bar pullback, and then a bar and then the bar takes out the last bar's high, that triggers a buy setup. It already triggered on Friday, but I wasn't aware of it. Now I am. So this looks okay over 440, stop under 419, and target, I would target $5 or so. This actually, that's 487 for target one. Okay, and then target two would be around 550. It's a daily buy setup. Okay, MDGS is kind of a unique play. It's not what I usually do, but it's off the hourly chart. It's an hourly based breakout. A lot of times stocks gap down a huge amount, and then the hourly, when the 20 MA catches up and starts to curl up, you get the breakout. You know what we're in right now? It is what is it? I'll tell you. I have my account open, so I just need to go to my account. It's the BCLI. So why am I in the BCLI? Because of the same issue. It had a large gap down, and oftentimes the large gap downs get bought, especially in bullish markets. See it? and the entry for this was 450. It's at 570 already, 577. So how did I play it? When the 20 MA caught up and then it pivoted, it curled, and then I played it as a breakout. I told you the entry was 451 to be exact. The stop was 379, which is under the base. And the target, I'm targeting $7 on it. So the 20 MA, it's now below, I guess, $7. I trailed out of half on Thursday, right here, trailed out of half, okay? And I'm keeping half. So this is already up a lot. And this is similar, the MDGS, a gap down, but I'm not expecting a big move out of it, just to 225, okay? I'm not playing every one of these, but unfortunately, I can't reveal which ones I'm gonna be taking, because this is, you know, this is reserved for subscribers only. That's why I said at the beginning of this webinar, if you'd like to know which ones I'm playing, just log on to your T3 Live account. You'll see which ones I picked for my own account, okay? So the MDGS is a breakout over 203 with a stop, I would say, under, let me check to tell you the exact stop. The stop would be under the daily lows, which is 184, target 225. Let me just tell you right now, it's not one of the ones that I picked from my own account, MDGS, okay? But I just wanted to explain the rationale behind it, why I like to play big gap downs higher. Okay, the MTNB doesn't look very good on the daily, but check out the weekly. Okay, check out the monthly. That's not bad. It's a monthly breakout. So MTNB, I like more as a long-term play. The entry for this is over $1.10, so $1.11 is good enough. Okay, 1 penny above. The stop is under 95 cents, or can even put it under the SPARS low, which is 99 cents. Okay, safer, I would say, would be under this bar, because that's the pivot. That's actually the pivot on the daily chart. Okay, so I'd put it under 95. Entry is just over the base, and it's more of a monthly play, so it's a long-term play. Okay, not a short-term play. Nikola, your favorite stock, is doing the same thing. Remember the MDGS we talked about? Remember the BCLI we talked about? So the same thing, gap down. Don't play the gap down long right away, but when the 20-period moving average catches up to price on the hourly chart, and price fails to break down, and the stock continues to base, the 20-period moving average is going to curl and start to point up. You see it? So it's exactly the same idea. Somebody said, I want consistency. It's exactly what I want. I do the same exact type of plays every day, every single day. Now I have 8 different strategies that I do. Okay, it might be strategy A, B, C, but I do the same exact 8 strategy. The only 8 strategies I've done my entire career. Okay, for the last 13 plus years. So over the base, stop under it on the Nikola as a long, and target around 2250, I think, which is where this is 23 bucks, so I would say 2250 to be safe. So the exact entry for it is over 1931. So 1931, so over the base right here. The stop is 1764, which is right here, the 1766, so just under it. And then, as I said, target up here, 2250. Okay, on the Nikola. Wriggle has a monthly breakout, I think. Let's take a look. Okay, it does. I hit that big topping tail, but over the base. Let's take a look at the weekly real quick. That's the weekly. It already broke out on the weekly. Okay, and now has a 1, 2, 3 on the weekly chart. So 1, 2, 3 means when you have an igniting bar, and then you have a resting bar, and then the next bar is a continuation bar. It continues in the same direction as the igniting bar. That's called a 1, 2, 3 setup. I've done videos on it on YouTube if you want to watch them, and you can just look for it or send me an email and I can give you the link. But it's one of my favorite setups. It's the setup that I just took on. Look at this, Uber and Lyft. I played Uber and Lyft on Friday. Uber as a swing on the daily chart. See it? It's an igniting bar, narrow range resting bar, and then continuation. I called this long on Friday for the newsletter. So it triggered over 53.51. I called the Lyft long in the day trading letter in the strategic day trader in the chat room, and it worked. See it? Now this is called the 1 2 3. Now the truth is these 1 2 3 setups here are, I mean, they're just, these are picture perfect. It's exactly what you want to see. You want to see a bar that's about twice as big as the normal bar, a resting bar that stays in the top third of the first bar's range, okay, and then another breakout bar. I mean, that is just totally picture perfect. So going back to the wriggle on the weekly chart, it's not as clean. This bar is not exactly twice as big as the average bar. And then last week, this bar is not exactly a very narrow range bar. Does that make sense? So it's not as picture perfect as the Uber and the Lyft are on the daily charts. This is the weekly time frame. The strategies that I do and teach apply to every time frame. Okay, doesn't matter what time. The time frame is just, it breaks the intervals differently, daily, weekly, hourly, monthly, right? But the strategies apply to every time frame. So this one, the entry for this would be over 317, stop 293, and the target up here somewhere, $5. So this is also a longer term play. So if somebody needs to turn their money over every couple of, meaning to take plays, hold on, I got the, if somebody needs to get in and out of plays quickly, this wouldn't be something I would recommend. This is for somebody that likes to buy and hold. Okay, so this is a longer term play. S&D is also off the weekly chart. It's a weekly breakout. So the entry for this would be over 208, stop under 180. It's a weekly, this is a weekly time frame, weekly breakout. Now the target for this on the S&D, target is 260 over here, the prior pivot on the weekly chart, okay, and 330, another pivot also on the weekly chart. So this is more, again, of a longer term play, and it's a weekly breakout. Let's go back to the daily chart, STSA. That's a beauty. I already got in it here this day, and it wouldn't go, so I killed it. But it's setting up again to go higher. You know what this reminds me of? If you're in the strategic swing trader, how about CAT-B a couple days ago, just 3 days ago? We were in it, and it went up 80% in one day. We got I sent out an alert intraday to trail it bar by bar. So this was the move that we were in, and it just exploded just 2 days ago. And I sent out an alert intraday to get out of it bar by bar. We got out of it, and then it collapsed. Don't care. So now that we are left with a huge topping tail, can't play it anymore. But we can play other things that look like it, like the STSA. Same thing, large gap down, like the CAT-B, 20 MA on the daily caught up and is now starting to point up. So I like it as a replay because I already played it and it didn't work. It's not that it didn't work, I killed it quickly. And then now I like it over 486. Now, if the STSA did what the CAT-B did, and the CAT-B exploded, right, and then got crushed. Now, as I said, we got out of it almost at the top, so great. But if the STSA had done the same thing, popped, and then I wouldn't play it. But it didn't. It didn't go, so now I think it will. So it just needs to take out 486. Now, what happens if it doesn't take out 486? Then I will not play it. Does that make sense? So it has to trigger. Some people think that, okay, this is good to go, let's buy it right at the open on Monday. And no, I don't do that. I use a stop limit order, and I only get in if it takes out the number that I like, which is the pivot usually, the resistance area. What's the stop? Under this little pivot. I can go back to change the scaling one more time. It'll open it up a little bit. See, that's logarithmic scaling. So the entry is over this bar's high, 486. Stop is under 430, 415. 415, exactly. Okay. Tell is oil. Oil is, especially the low price stocks, oil really did well last week. So this one is continued to base. It did do well, but the week before last. and now it's basing. So it's a base breakout over the base and then stop under it. The exact numbers for this are 171 in terms of the entry, and the stop would be 140, which is this bar's low. That's 141, so 1 penny below it, that's the stop. In terms of a target, $3 is what I'm targeting on the TELL. Okay, the prior pivot high, this bar, this is actually two. I'm sorry, this bar probably. That's 330. So around, let me look at the weekly. So I'm targeting about 3 to 330 on the TELL. Okay, it'd be 4 reward to risk units. So 4 times your risk. If it got to just to $3 over 4 reward units or risk units. These ones we were just talking about, these are not on my list. Again, the Lyft and the Uber, by the way, you might have missed out on, but if you're not in the newsletter, you might have missed out on. But look, maybe we gap down on Monday a little bit, and this gives you another narrow range bar like that red bar, in which case you can get another 1, 2, 3 setup. So I wouldn't totally, say, well, they're gone, because you never know, right? They might give you another entry if you're not in them already. Okay, so those are the long ideas for Monday. Here's the short list, and it is a short list actually. We got, I don't like the shorts that much, to tell you the truth. We got HEPA. So remember I told you about the gap downs, that when the 20 MA catches up and the price continues to base on the hourly chart, and then you get the hourly base breakout, but the price did not continue to base. It actually broke down and is now basing at the bottom. So if we break under the base, I like it lower, stop above the base. So the exact entry on this would be 149, which is under this bar's low. That's 151. I wouldn't enter at 150. That's the half number. I'd give it 1 penny below. So 149. The stop on this, I would use 163, which is, this is 162, so just 1 penny above it. Okay, so this is an hourly base breakdown. I don't love it because this was also a secondary offering. It wasn't a real gap, it was a secondary offering. HYLN, gap down last week at the beginning of the week, was really bearish and stayed weak. So now we have an hourly base breakdown. So just under the base, short, under 1789 is the entry. 1789, stop is over $19 over the base. So just over this, no, over this pivot right here. That's 1896. I'd put it at 1901. It's not one of the ones that I'm looking to play. KR gap down on Thursday. And just like on the way up, I like the 1, 2, 3 long. Well, I like the 1, 2, 3 short also. So this is the gap down, the narrow range bar. Now, yes, it wasn't an exactly narrow range, but if it breaks under this bar's low, then I think this could drop to the prior $28, the prior pivot low. So KR is very, very weak. I would love to get another narrow range bar, meaning I'd love for it to base one more day on the hourly chart. This way, the 20 period moving average catches up. Okay, so I'd love to see it just continue sideways without going lower one more day, and then it'll be fantastic as a short. And the entry for this is at 30.34, just 1 penny below the lows, and the stop for this would be over 30.95. Okay, so 30.95 is right up here on the KR. Target is about $28. That's a pretty nice healthy target on KR. MAS, now remember we talked about 1, 2, 3, the igniting bar, the narrow range bar, and it's best if the narrow range bar is in the opposite color of that igniting bar. Meaning, remember the Lyft and the Uber? Lyft and Uber, the narrow range bar was red. That's exactly what you want, because it establishes, it tells you that the top of that bar is resistance. Okay, so that's exactly what you want. So similar here, we got the MAS, we got the red bar, and the narrow range is a green bar, unlike the KR was a red bar. So I prefer, if I'm looking to short, that the narrow range bar be a green bar. Okay, now this isn't exactly the narrowest range bar I've ever seen, but you get the point. They're not every play is picture perfect. Okay, and then we got another narrow range inside bar. So I like, this is kind of a 1, 2, 3, and then if we trigger on Monday, then it will be a 1, 2, 3, 4, a bearish 1, 2, 3, 4 continuation play. So that's what this would be. So I like it short. This is one of my favorites as a short. I like it short under 51.54. Okay, 51.54. Stop is over 52.70. Okay, it's a big stop. It's over this bar's high, and target is around 49.50, which is the 200 MA. So as you can see, while I like the pattern more than the other ones I've reviewed so far, the bearish ones that I've reviewed so far, in terms of reward to risk, it doesn't really have a lot of room. That's the red line is the 200 period moving average. So it doesn't have a ton of reward to risk. That's the problem with it. MSTR is super wild, but this is called a climactic run-up, climactic sell setup. So if it takes out 317, 20, 38, it will trigger short. The stop for this would be 337.22, just over this bar's high. Below it short, stop above it, and target the 20 period moving average on the daily chart. Okay, so when they go, stock could go at, if the stock is going at 100 miles an hour and it just maintains that same speed, then it's not climactic. But when it goes at 100 miles an hour and then starts to go at 120, 150, and 200 miles, that's not sustainable. And it might be the best stock in the world. It might be, remember the CRSR? It might be, the hottest stock in the country, but you still have to get out of it if it goes climactic. So again, a stock going at 100 miles an hour from West Coast to East Coast, a car going from the West Coast to the East Coast at, let's say, 60 miles an hour is sustainable. But if I told you that the car had to increase its speed every mile, it has to, or every hour it has to go 10 miles per hour faster, then can it sustain that and get from West Coast to East Coast safely without the engine blowing up? No. So you see, that's what I'm talking about here. Stock accelerates, right? Notice how the distance between the 20 period moving average and price is consistently increasing. It's not maintaining the same distance. It's consistently increasing. Then that's when it collapses. You have to get out of it. You have to get, otherwise you give back everything. So the MSTR, I was not in it, unfortunately. It would have been a wonderful play. But now I like it as a short. Being that it's a $328 stock, I'm sure it's going to be very spready and wild. I don't like to do the wild stocks, but just a heads up, this is probably going to be very spready and crazy wild. And NEPT is a sell setup. I like the hourly chart a lot. It's a rounding top. So, and then we have a double bottom. This is the first bottom, that's the second bottom. It's a retest of the prior pivot low and it held. So now if it breaks, then it should follow through. That's 168. So under 168 as a short, okay? On the NEPT, so 167. Stop on this would be over the tail, which is 181. So I'd put the stop at 182 and target the prior pivot low at 150. So this is a low price stock. We're looking only for 30 cents basically. We're not looking for dollars, okay? But 30 cents on $1.70 percentage-wise is still pretty healthy, okay? Pretty good. SPWH is a 123. Now it's got a flat 20 and it has the 200 below. So, just keep that in mind. We like declining moving averages when we're shorting, rising moving averages when we're playing long. So short under this bar is low, 1286, stop 1357, and target the 200 period moving average. And that's it. Those we were just talking about from earlier. But that's basically my list for Monday. Now, every day after the close, I scan and I generate a new list to feed off of every day. So this is just, I do this video every weekend just for free to share it with you. And I share with you my list for the next day. Now, some of these items, like let's say if I like them and they don't trigger, then I will continue to watch them. For example, the STSA, I've been watching for a while, hasn't triggered for a while. So let's say it puts in another narrow range bar on Monday. Then on Tuesday, I'll still play it, okay? Or let's say on Monday it crashes, then I'll just take it off my list. So some of these, while this list is prepared just for Monday, for the next day, some of these will still be okay to watch and consider for the rest of the week, for the following weeks, okay? For the following days. But the truth is, I have a watch list that I go over every day after the close, and I generate my list every day, and it's a new list every day. But I hope you enjoyed this. I'm gonna go ahead and, oh, I was gonna talk about for a minute, I was gonna talk about Bitcoin. I'm telling you, Bitcoin, I'm in Ether, but Bitcoin and Ether look pretty much identical. So let me see if I can bring the chart up. Bitcoin's chart. Okay, let's see if we can bring it up, but they look higher. So if you're into the cryptocurrency, they certainly look higher. Let me see if I can show you here real quick. Should be able to. There we go. Oh, is that not it? Why is it showing the whole screen? 1 second, please. Okay, that should do it. That should do it. Okay, so what's happened in Bitcoin with Bitcoin is it rallied to the all-time high, which is around $20,000, and it's basing. So let me show you the all-time high on the monthly chart. So this is the all-time high, and it rallied up to the prior high here, from which it crashed, right? It went from 20,000 almost down to $3,000, and it rallied up there. I need to fix the margins, I guess, on this chart because, and it's basing at the top. So that means, what does that tell you? It means it's not backing off. Okay, it's not backing off. It means it should be higher still. So I like Bitcoin. Here it is. I just fixed the margin. I like Bitcoin higher. I'm in Ether because Ether has room. Ethereum, that is, has a lot more room. Well, Bitcoin has, we don't know how much room it has because it's at the all-time highs. But to me, Ether, it's at $600. It should, I got it at 495 or something. It had a 1, 2, 3. That 1, 2, 3 setup, I'm telling you, you better spend some time learning it. It is just marvelous. There's the breakout on Ether that I took. Okay, here it is, over this bar's high, 492, I believe, or 490, 495. Okay, so I'm in Ether, not in Bitcoin, but I would like, I got into Bitcoin also, but it was just a quick trade, like off of the hourly chart, and I got out. I'm in Ether. I kept Ether because Ether has room, has a lot more, or has a lot of room. I don't know how much room Bitcoin has because it's at the all-time highs, but Ether, I'm thinking it should get to this bar's high, which is 828. So it has a lot of room just to get to the prior resistance area, and then if it gets to the prior all-time high, that's $1,400. Okay, that's a lot. So you know, you could do Ether, you could do Bitcoin. There's other cryptocurrencies, of course. The big five are Bitcoin, Ether, Ripple, XRP, Litecoin, LTC, or Bitcoin Cash, BCH. Those are the big five, the most liquid, the most tradable, and I would focus mostly on those personally. But XRP already popped really hard. If you're not in it, it's kind of late. So, and then Litecoin doesn't look as good. Actually, Litecoin looks amazing on the monthly chart, but it just needs more time, in my opinion. See how the 20 is starting to point up? Great. So maybe this month it'll be a narrow range bar, and then the following month, January, it'll trigger a 1, 2, 3 setup, the setup that I've been talking about all morning. So this would be amazing. Litecoin. Litecoin prior high is at $400, 420 to be exact. So it has plenty of room if it wants to retest the all-time high. But I don't think this is quite as ready as Bitcoin and Ethereum. Now, where do you get these? How do you get into these coins, cryptocurrency coins? Well, you have to open what's known as an exchange, cryptocurrency account. You have to open an exchange account, or you know, what is it? Robinhood has it. Webull has it. I mean, you name it. All these new trading apps, they also, you know, they give you access to cryptocurrency, or just a normal exchange like you know, procoinbase.com, or you know, coinbase.com, or any of these other exchanges. There's dozens of them, actually hundreds, but a lot of them are international. So I just want to talk about that. What else do I want to talk about? So check out, let me show you this. I don't know if I can show you this or not. Check out the performance so far this year. This is Friday. Here's Lyft, by the way. I told you I played Lyft on Friday as a day trade. That's it. This is my, and here's for the year. As you can see, this is a live account. It's updating as we speak. It's $779. Okay. Now, why am I showing you this? Obviously, I'm not trying to show off or anything like this, but as proof that I'm a real trader, because a lot of these educators out there are fake. They don't show you any proof, and you know. So this is so far for the year. I actually opened this account only in March. I have several accounts, right? I have a Sterling account. I have a TradeStation account. This is just one of them. And I played Lyft on Friday in it. Had a pretty nice day on Friday, $6,000. So at any rate, hope you enjoyed today's little discussion. It's what I always do on the weekend, but today I'm doing it with Mike because T3 has a great offer if you would like to take advantage and join me in the Strategic Swing Trader newsletter. So I'm going to go ahead and pass the mic over to Mike. Thank you so much, guys, for being here, and have a great rest of the weekend. Here's Mike.
Okay, guys. So what did you think of Sammy's presentation? Because we wanted to show you basically how a real trader approaches the market and builds a watch list rather than you know, something boring regular lesson. We wanted to show you some actual actionable stuff so you guys have a whole bunch of stocks to look at on Monday. And honestly, I didn't even know about the Bitcoin stuff that he was even going to be talking about that. So we can consider that like the crypto commentary bonus. So thank you very much for that, Sammy. So we want to invite you to join Sammy's Strategic Swing Trader newsletter. So you're getting his insights every day during the week. So let me tell you a little bit about it. So this is where Sammy shares his top swing trades with you every single morning. So you have a complete game plan to go with every day. I mean, the worst thing is to wake up asking, what should I do next? Well, this solves that problem completely. So Sammy and I actually had an interesting discussion about scanning yesterday. And he's looking at hundreds of charts every single day. And he's handing you only the select few that have the best setups. We looked at probably 30 or 40 charts just now. Sammy probably went through thousands over the last week just to get to that point. And so his setups include gaps, pullbacks, breakouts, and more. So, and the cool thing about Strategic Swing Trader also is that it's super simple to use. Sammy picks the trades. He gives you the exact entry point. Like this is the exact format you receive in the morning. Like this is literally all you need to know. Does the stock hit the entry price? Is it long? Is it short? Where's the stop? What's the setup? So people can read the newsletter in seconds, enter their orders, and then they don't need to do anything else for the day. We have a lot of people that have regular jobs. I'm sure many of you out there have 9-to-5 jobs. You don't have time to watch the market all day. This makes it easy because you get the setups, you can drop the orders into your broker, and you're done right there. So the regular price for SST is $129 per month. But if you act now, you can get your first month for $49. So that's saving you $80 or 62%. Again, just $49 for your first 30 days. And if you want to sign up, you can go right now to t3live.com/SST to sign up. I'm also dropping the link in the chat. And somebody just asked, is this just stock trades? Yes, it's just stock trades. I mean, Sammy might occasionally talk about cryptos on coaching, but it is completely stock focused. So somebody just said, I need a mentor, not stock picks. So William, I'm actually going to address that issue in just a second. So you actually get more than just ideas for your $49. So we estimate that 99% of traders out there, as in regular retail traders that are just trying to make some extra money trading, have never had any kind of coach or mentor. Well, with SST, you get coached by Sammy every Monday after the close. So if you join today, you join tomorrow's coaching session. So you can ask him literally anything you want about swing trading, his other strategies, what's going on in the market. You can ask him about cryptos. You can ask him anything. And it's included with the regular price. So if you need a little help, this will help you quite a bit. You also get Sammy's earnings plays during earnings season. So these are his long and short calls on hundreds of stocks before they report earnings. And we consider this like a turbocharger for your account. So 4 times a year for 6-week stretches, you get all these extra bonus alerts on his earnings plays. And Sammy just added to me also, you have access to him via email. So if you ever have a question about trading, you can just email Sammy. Sammy is a super, super nice and friendly guy. So you can always do that. So guys, again, just add it up. 62% off. You get the Strategic Swing Trader newsletter, you get the weekly coaching, you get the earnings plays, and you get it all for just $49 if you go to, again, t3live.com/SST. I'm going to drop the chat again. t3live.com/SST, and you could sign up right now. I'm just dropping the link in again so you have it. Again, t3live.com/SST. I'm just repeating it over and over so nobody's confused. So we also have a couple of upgrade opportunities if you want to join. I'm going to show you the page right now on my screen. So if you scroll down to the bottom, we have 2 upgrade opportunities right here. And we suggest you think about them because they are pretty amazing deals. So first, you can save $216 on the SST course. This is 5+ hours of video training in Sammy strategies. You get a swing trading course guide. The regular price is $295. If you add it to your order as a bonus, it's just $79. Again, all you have to do is check the box here, and you'll add that to your order. It's just another $79. So it's a pretty amazing deal. We have a second one. If you are into gaps, so gaps is a very important part of Sammy's strategy, and it's one of the main reasons he has such a big P&L this year is he's done so well with his gaps. So you can save $600 on the Advanced Gap Strategies course. The regular price is $795. Sorry, $295. You can add it to your order for $295. Again, if you just want the newsletter, it's $49, but you can add these bonus courses to your order if they work for you. So somebody's asking already, what happens after 30 days? So if you love Strategic Swing Trader, only if you love it, your membership renews at $129 per month. If you need to cancel, you can do that in about 30 seconds through a simple online form. Unlike some of our competitors, I'm not going to name any names, we will not keep you on the phone for 3 hours. If you wish to cancel, you can do it in about 30 seconds. And if you want to upgrade to an annual later, we can get you special pricing on an annual. We think for most people, starting at $49 is the best way to go. So big question, do I keep the course if I cancel my membership? And the answer is yes. If you buy the courses, they are yours to keep with absolutely no strings attached. Do I need any special software or platforms? No, you can utilize Sammy's ideas with any brokerage account. You don't need to buy any special software, scanners, anything like that. You don't need to do any of that. And Sammy, and you can see Sammy doesn't use a lot of special indicators, so you could even use free charting software if you wanted to. So what if I can't attend a Monday coaching session? This is another popular question. You can watch video recordings in your customer portal. Everything is recorded. And again, if you have questions, you can just email them in. So that's not a problem at all. So don't worry if you can't attend coaching. When are the earnings plays released? So about 3 weeks after the end of each quarter, Sammy starts issuing the earnings plays, and you get them for about 5 to 6 weeks, which adds up to hundreds of additional trade ideas. And it's like getting a second newsletter for free. They are slowing down right now. Earnings season is slowing down, but these will pick up again early next year. And again, we consider those more of a bonus. So guys, that's going to wrap us up. We hope you consider the offer. Again, just go to t3live.com/SST and you can join right now for $49. It's just $49. Sammy, are you still on the line?
I sure am.
Do you have a couple of questions? We have
Sure.
a couple of questions out here. Okay, so let's clarify the whole stocks versus cryptos thing. So do you ever offer crypto ideas inside the newsletter, or I mean, is it something you talk about in coaching?
No, it is something that I do offer inside the newsletter. It's rare when they set up because there's only 5 that I'm watching versus stocks I'm watching hundreds. But yes, I do offer also cryptocurrency plays.
Okay. So what are the time frames on your swing trades generally?
So there's mainly two types. So there are ones where I'm looking just to keep the trade for just 3 to 5 days at the most, and those are the swing trades. And there are some that I'm looking to keep long term. So those could be, weeks. The truth is, a lot of the ones that I'm looking to keep long term, they end up, they might end up moving a lot, and I might have to get out of them. Like the CRSR, the Corsair. I meant to keep that for weeks or months, but it doubled almost in a matter of 2 weeks. So I had to get out of it because it went climactic. So there are mainly 2 types: the swing trades and the longer term trades. And I identify them in the newsletter, which ones are which ones are long term, which ones are just for a few days. And some of the swing trades get to the target in 1 day. I get on them and then they explode, right? And they get to the target in 1 or 2 days. Sometimes they take a few more days. And then again, the long-term plays, which might take weeks, but those are not as, they come up maybe 1 a week or so, not every day.
Okay, folks, do we have any other questions out there? Oh, so somebody's asking about annual subscription. So you can buy an annual subscription for $1,295 if you really want. We think you're better off starting for $49. Honestly, it's like I've subscribed to a lot of things myself. It's always best to just start with the monthly because it's just $49. And so you're not taking massive risk. So this way you can literally not trade if you don't want to. You can just watch Sammy's ideas for a month and then think about whether you want to do an annual subscription or not. Most of our annual subscribers start off as monthly. So we suggest you definitely start with the monthly. And again, you can go to t3live.com/SST to sign up now. That is going to wrap us up for today. So thanks everybody for coming out on a Sunday morning. T3 Live will be doing more live events much more frequently. Again, go to t3live.com/SST and you'll start getting Sammy's trades tomorrow morning. And you will also attend coaching tomorrow after the close. So again, guys, thank you for coming out on a Sunday morning. We really appreciate your time. Have a great day.